Welcome back. Downbeat metal prices have weighed on Impala Platinum, resulting in the group having to write down the value of its assets. This saw it slip into the red, reporting an annual loss of 17.3 billion rand. And joining me for further insight on the miner's performance is CFO Meroonisha Kerber. Thank you so much for your time, Meroonisha. Of course, just with any other PGM miner in this kind of cycle, let's start off with the PGM pricing that softened your key financial metrics. How challenging was that for Implats?
So, Zanati, the fall in the metal prices. So, if you just look at the dollar metal prices, it reduced our revenue by 40 billion rand. So, if you can imagine, notwithstanding a really strong production performance, excellent cost control, there's very little that you can do to try and mitigate the impact of the lower PGM pricing. And as you probably heard or read, it also resulted in quite a material once-off charge. So we did book just under 20 billion rand worth of impairments at 4 of our operations, and that's purely because of the drop in the pricing.
And what's actually the big pressure points right now in this current cycle where you have this downturn in PGM prices?
So it's basically to survive these prices, because the prices are trading quite deeply into the cost curve. So I think what the key is really to make sure that your operations are as robust as possible from an operating perspective. The costs are well controlled. Your capex intensity is reduced. All of that supporting your free cash flow. So to the extent that you can break even and generate positive free cash flow in this environment, I think that would be a good performance. Because as you can imagine, as strong as the balance sheet is of a company, you cannot sustain indefinite losses. So it's really key for us to make sure that each and every one of our operations is actually free cash flow break even at worst, but hopefully free cash flow positive.
And actually, just talking about that cost control, I'm just wondering, how much runway do you have in terms of continuing to trim those costs in a sustainable manner? And is there any hope that maybe that can feed in significantly into the margins?
So I think to the extent that we have been able to bring costs down, you will see largely our unit costs increase 5% year on year, on a like-for-like basis, because as you may be aware, the Impala Bafokeng operations are higher cost than our original assets. If you look at it on a like-for-like basis, the unit cost increase were only 3%. Now take that in the context of wage increases, which are about 6%, utility increases, which have been double-digit both for South African and our Zimbabwean operations. Really, some of the levers we've pulled, everything from cutting salaries. So our Zimplats operations, for example, they cut 10% of their salaries from the CEO down to the lowest level employee. In South Africa, we basically did not give management increases last year across the board, to making sure that on our consumption of consumables, explosives, etc., that we make sure that we improve usage, that we push down increases, etc. So the biggest, as a mining company with a big fixed cost base, probably the biggest variable is production. To the extent that you can deliver on your production, it will bring your unit costs down. Looking forward, I mean, after we exhausted all of the costs, the cost initiatives that we had, we did have to unfortunately turn to labor restructuring. So you would have noted that we did embark on a Section 189 at our South African operations towards the end of the financial year. Our Zimbabwean and Canadian operations actually had completed some of that early in the year. And as you can imagine, we turned to labor reductions as the last resort. So we did try and reduce our labor complement successfully. There were about 4,000 positions which were affected. Fortunately, we managed to, we lost 2,000 employees through attrition. 1,000 employees we were able to reskill and redeploy across the operations. And we did do voluntary packages with 1,000 employees. So the reason the labor restructuring was so important is that we now start the year off with a lower cost base. And that gives us the ability to try and pull back some of the inflation, because as you know, on the remainder of our costs, on electricity, on consumables, there's very little other than once you get to be more efficient at utilizing the commodities, etc. There's very little further that you can do. So I think going forward, the labor reductions were necessary, as hard as it is, because as you can imagine, parting with embarking on a labor restructuring exercise is a very difficult process for a company.
Yeah, indeed, very rigorous cost control exercise then really speaks to the survivalist state that PGM miners are in right now. Meroonisha, I want to close off the conversation because you talk about production and how guidance was met, and also the strong operational delivery. But we did have an unfortunate incident last year in November at the 11 shaft tragedy that occurred in November, where you did experience fatalities there. Did that affect production and the cost of production in any way?
So if you recall, at the time that we had the tragedy at 11 shaft, we basically not only stopped that shaft, but we stopped the entire Rustenburg lease area as a precaution to make sure that until we understood what happened, that we would not put anybody in danger. As a result of that stoppage, and 11 shaft obviously taking time to do the investigation, then to ramp up, we did lose about 50,000 ounces of production. And so notwithstanding that, our Rustenburg team, led by Moses, did an incredible job to still meet the guidance. They in fact exceeded their guidance for the year. But it was a difficult year, and you can imagine after a tragedy like this, it was a strong team that pulled together to deliver the volumes, particularly given the low price environment, because they understand that volume is really your biggest ticket to try and return to profitability.
All right. Well, we do have to leave the conversation there. Thank you so much for your time and giving us more detail on the numbers that we did see coming out of implants today. Thank you, Meroonisha. That was the CFO of Impala Platinum, Meroonisha Kerber.